Okay, I think we're good to go here, so we'll go ahead and get going. I do appreciate everybody who stuck with us. Thank you very much. We're going to quickly go through these intro slides so we can get over to Chadd Baugher with MassMutual Ascend as we jump into a couple great products as well as some non-qualified and qualified inherited IRAs. We will have a couple polls throughout the webinar, so as those come up, definitely participate in those. We'd love to hear from you. The first thing that I want to highlight here is that we do have best-in-class customer service, and we do that with answering the phone with a live person every single day during normal business hours at 800-255-5055. So you never have to worry about doing a dial by name directory or leaving a voice message. If one of us is not able to help you out, we're going to get you over to somebody who can. Next, we have our new producer builders. These are for those of you who are new to us with IAMS. They're available with you in the first 6 months of contracting with us. As you can see, there's several great levels and lots of different perks, including marketing strategies, as well as vacations, technology, and cash, if that's what you'd like. If you'd like to know where you stand towards your new producer builder, or if you'd like to have a conversation about how to achieve that next level, please give us a call and talk to your sales director. Moving on to another business builders program, we're going to go over to our referred producer program. I do see a couple producers on today that have taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field, and that one of the best leads we could ever obtain is a referral from one of our valued agents. This is why we want to make it worth your while when you refer a producer to us. When they do get contracted, we'll cut you a $50 thank you check. Now, where the real money comes in is as your referral writes business, you'll receive an override on that business. Our ownership team, Steve Murray, Charles Hearing, Curtis Hawks, and Chris Conroy sign checks for thousands of dollars every quarter. With that being said, if you can think of anyone that could benefit from doing business with our team, definitely send me an email at timw@iamsinc.com with their contact information, and I will reach out to them today. Below that information is our marketing reimbursement program, which is actually our most popular program. For every $100,000 in FIA premium that you sell, you get $100 in your marketing reimbursement account. Why this is so popular and lucrative for our advisors is we do not tell you where you have to spend the money. We don't cap your account or tell you when you need to cash it in. It's your marketing reimbursement. Now, you can utilize this with the providers that we've leveraged better rates and preferred service with, and our in-house creative team, or you can utilize it for those marketing strategies outside of IAMS. Again, this is your marketing reimbursement. If you'd like to know where your current balance is, give us a call. Again, 800-255-5055. Another way we strive to help our agents is with back office support. This is at the core of IAMS and how Charles Hearing founded us over 36 years ago. We want to help the independent advisor work smarter, not harder. We're going to do that by helping you out with those great business building tools and resources. Of course, advanced case design assistance for life and annuity quotes is an area that we assist with. We're going to get you those illustrations within 24 hours, but typically it's going to be well within that, typically about an hour to two. Submission to commission support is handled by our new business teams. Mackenzie leads the annuity side and Michelle heads up the life side. They have fantastic teams who work tirelessly to help you get commissioned quicker. They're going to scrub your application, submit them on your behalf, do the administrative tracking, and get you updates on the case as needed. We do this to ensure you get commissioned as quickly as possible. This is a service that we provide to our valued producers, and how we help you grow your business by keeping you in front of clients while our team handles the back office support for you. Next, our website is a phenomenal tool for our producers to use and another reason to work with us over here at IAMS. Once you're contracted with us, you'll have full access to everything that you see on this slide, plus a lot more. If you haven't registered for the website, it's very simple to do. When we're done with this call, go ahead and create that account and give one of those sales directors a call. We'd love to walk you through the website. There are a lot of great tools available for you, including illustration tools, online forms, product grids, agent training, sales support, and product news. Firelight and other EAP solutions are here. This is a single sign-on at IAMSinc.com. Will get you access to Firelight, iPipeline, Sunfire, EIGO, plus any other ones that get added over the next few years. Most of our carriers are on an EAP platform, so you can go onto one site and submit the business. This is going to be a COVID-friendly manner to submit that business, and some carriers are going to EAP only for their product lines and may offer you additional commissions for utilizing that EAP platform. Make sure you talk to one of your sales directors before you submit that next paper app to make sure that you're not leaving some money on the table if you submitted a Firelight app. Utilizing our Firelight platform accelerates the application process substantially. This EAP platform helps you submit business in good order the first time. This also reduces the processing time of your business and gets you paid quicker. As I mentioned previously, this is a single sign-on at IAMSinc.com, as we've integrated our business with Firelight so you can have the most effective and efficient way to submit business. We do have a full in-house creative team that I mentioned earlier. They can help your practice with a lot of items. Many of these are turnkey. We can simply impose your contact information and or business logos onto flyers, presentations, prospecting letters, and much more. Speaking of logos, agency solutions are something that we are very good at. And if you haven't created a full customized brand for you and your agency, we can help. This is going to assist you with name recognition, which grows your natural market organically. We can get you your logo designed and imposed on business cards, brochures, and stationery. Sorry about that. Brochures and stationery. Lastly, what everybody is currently looking for are those digital marketing solutions, and we can definitely assist with that. We can help you out with those websites, social media marketing, email marketing, and more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Making sure you're accessible and represented in those marketing lanes is definitely going to be beneficial to growing your business. Reach out to myself or one of our sales directors for a call once this webinar concludes to see how IAMS Creative can help get your agency to that next level. We founded IAMS Wealth over 5 years ago now. What we've done is grow this division on IAMS very organically. We've helped advisors become IARs and pass the Series 65 at a very successful clip. Once we have you registered, we'll bring you great value to your practice with an incredibly competitive fee structure for both you and your clientele, as well as a great technology and investment platform. One other thing to note with our IAMS Wealth Management, if you are working on that Series 65, or maybe you just have somebody where you don't want another agent in your client's wallet, we can support you with moving those funds over to us. And then once you do get Series 65 registered, we'll simply move those right back over to you and make that process seamless to where you're making those fees and it's just like you're the agent and have been the entire time. So not only does that IAMS Wealth Management team provide you great value, but they can also help keep your wallet share as high as possible with your clients and keep other agents out of there for you. Next, we do have our virtual Life and Annuity Academy coming up this January 24th. This is going to be a one-day event. If you would like some information on this, definitely go ahead and put that on the questions and say you're interested in learning about that, and I'll get you an invite sent over. But we're going to have the president and CEO of NAFA on as one of our keynote speakers, as well as a best-selling author who wrote The Social Advisor, plus a lot more, over 25 hours in total of trainings, webinars, and sessions here for you. But that will be going on January 24th from approximately 11 Central to 3 Central, and we would love to have you out there. Next, we did just close our Seaside Sanctuary qualification. I do need to get this slide updated because we do have another one that's going to be available, and that is going to be for the Seaside, or for the Wentworth by the Sea. So we do have a qualification going on currently right now. So if you do have any questions about that, definitely let me know on that. All right, I'm going to go ahead and pause here real quick. I need to go grab the presentation here, and Chadd, you're going to be up next. So let me see if I can go grab this presentation here real fast.
Okay, and I'll just, if you want, I'll just get started on my end, just with a quick intro, and we'll just see where the slides come up here. Yeah, Tim has to do the driving for me on the slides as I'm on this presentation on my phone at this point. But hey, I appreciate Tim inviting me to join you guys. Pretty exciting things going on here at MassMutual Ascend. Again, my name's Chadd Baugher. I'm the Regional Vice President with MassMutual Ascend, and I support a lot of our IMO partners in the marketplace. And many of you may know or realize that, well, who is MassMutual Ascend? Well, we were formerly Great American Life. Many of you may have done some work with Great American in the past. I've been with the organization as a whole for, it'll be 14 years this April. So I was with Great American prior to the purchase. Really, nothing's changed. We are virtually the same organization. We were just purchased by MassMutual as they wanted to enter into the IMO or third party distribution space. MassMutual, huge name in the marketplace, but ultimately does most of their business through their captive agency of about, I don't know, 7,500 or so captive agents. So they really wanted us for us. So really not much has changed other than having $60 billion behind us in the way of cash and an outstanding competitive company. So Tim, the next slide, next couple of slides, if you will. So the next one from there. You will see a little bit more on the rating side. We were already a fairly highly rated organization at Great American, but gosh, we're A double plus, AM Best now with that MassMutual backing. And when you're looking to position your clients in the marketplace, I think with all of the uncertainty out there, whatever's going on in Russia and Europe, and we've got the interest rate environment and such that we're living through, and the markets are getting beat up one year and then volatile and up the next year and back and forth. Ultimately, I think it's important to know who the company is that's backing your client's dollars, and you're not going to go get any better than MassMutual backing those assets. Next, Tim. So before I get into what I think has brought us to join you guys today, which is we have a really cool index strategy where the caps are guaranteed. I just wanted to highlight a couple of things because it's not all about product. It ultimately is also about the company and some of the other things that are available through that organization. And then just a couple of quick sweet spots for us. There's 20 types of trusts and non-living ownerships in the marketplace. We at MassMutual Ascend accept almost all of them. So non-living owners shouldn't be a problem with us. We don't take or allow 401ks or pension plans or deferred type of plans to own, and maybe a couple of other types of trust. But ultimately, virtually any non-owner situation, we probably are a good spot. Another area where we're real unique is we do issue to older ages. We've got a couple of MIGAs that issued age 90, but also on the FIA front, we have a 3-year fixed indexed annuity, folks. I mean, those just don't exist in the market. If you have somebody who's just getting closer and closer to wanting that money sooner than later, but ultimately wants to outperform the bank, then we've got that 3-year fixed indexed annuity, issues all the way to age 90, and through age 90, and then we have the 5-year solution, 5-year FIA Landmark 5 that issues through age 89. But a real sweet spot for us, Tim, next slide, is inherited annuities. And, I don't know why, but many carriers do not take inherited, non-spousal beneficiary type of annuities, whether they're qualified or non-qualified. And at MassMutual Ascend, we'll accept both. Here, I'd like to dig into this a little more because I think this is an opportunity that sometimes isn't looked at very well from a financial advisor standpoint. I think there's an opportunity for some generational planning when we start looking at annuities and how they may pass on to the next generation. I mean, baby boomers are set to pass 68, sorry, Tim, next slide, $68 trillion to their children. And this was just updated through December of 2022. These numbers might even be higher, but $68 trillion set to pass on to the next generation. Next, Tim. And when we look at this, I think let's talk about some positioning as it relates to this. We've seen record inflows year over year in annuities. I don't care if you look back a decade, 15 years, whatever the number is, but most especially these last few years, especially with the volatility that occurred in the markets in 2022. You had a lot of inflow into fixed type of annuities, but there's record inflows. Next slide, please. And here's the LIMRA report. Now, unfortunately, this is only illustrative through Q3 at this point. We should have the Q4 total numbers here soon. But if we look at this and we just look at the gray scaled year-to-date 2022, and you go down towards the bottom, 223 million in annuities sold in 2022. And just go up one tad there, you'll see 143 in fixed annuities. So 143 billion in fixed annuities in 2022 for the whole year. Now, if you come over to the year-to-date 2023 and go down to that same line item, 196 billion just through Q3. And 2022 was a massive year for annuities. So we're gonna bank well over probably 240 billion or so in the way of just fixed annuities, and then clearly about 320 or so is, I think, the number that they're planning on coming in total annuity sales for 2023. Folks, you have clients that likely have annuities, especially if you're on this call, but you also have clients who likely will acquire annuities through the death of an owner of an annuity. So next slide, please. This goes back into some of the other detail on why it's important to look at keeping that annuity and where there could be some opportunities for that beneficiary. First of all, a small percentage of deferred annuities are annuitized. The number's 2%, folks, that of annuities that are actually annuitized. So what's that mean? That means that an annuity eventually is going to end up in a non-spousal inherited situation. Again, you likely have clients either with or inheriting annuities. Compounded growth is phenomenal. That's one of the benefits of annuities, but it also ultimately means taxes at some point in time. And there's a possible transfer of wealth to multiple generations when looking at annuities. So next slide, please, Tim, and I'll move through this kind of quickly here. Keep hitting next till we get the full slide. That might be the best idea. But when we look at the common death benefit options when there's a non-qualified situation, we have non-qualified stretch and we have beneficiary IRAs. Unfortunately, with the Secure Act that's come into play, you can't stretch those IRA assets for the life expectancy of that new beneficiary, but we can still on the non-qualified side. So if you have non-qualified inherited situation, ideal for large gains, you can spread those taxes out over the life expectancy of that new non-spouse beneficiary. So something to keep in mind. And also, even on the qualified side, knowing that you can kind of spread that tax burden even over 10 years could really help. Plus, it's an opportunity to participate in the market growth, or not market growth, market linked growth in an FIA or even a MIGA. We allow it in our MIGAs as well. Although right now, from a competitive standpoint, our FIAs are more attractive. Next, Tim. So again, the benefit of kind of keeping an annuity as a beneficiary is continuing that growth, spreading that tax burden, and designating specific beneficiaries, because we all know that bypasses probate. So an annuity is a great opportunity, a great way to open up a conversation with beneficiaries. I don't think we do enough beneficiary planning. And it's ultimately a pretty easy question to ask or suggestion to the client is, hey, do you mind if we take a quick peek at your beneficiaries, make sure everything's lined up correctly, and ultimately maybe we bring them in on the next meeting? Because if you're working with that 70, 75, 80-year-old client, ultimately their beneficiaries or their kids are adults. Wouldn't you like to have access to those assets, right? So let's bring them in. Let's talk about what mom and dad have, and how the son and daughter and whoever it is that's available as a beneficiary, how they shouldn't just surrender that policy when it does come their way, when their parents get their halos. Next slide, please. Let's skip over that one real quick. And Tim, let's go to the next one. And here we're just going to show how this could be beneficial and why MassMutual Ascend makes sense here. So here we have John. He purchases an annuity with $100,000, and he's 65 years old, and it's a non-qualified annuity in this example. 11 years later, at age 75, he passes away. I'd like to chime in real quickly here with everybody because I think we're a little bit unique in this regard. Tim, I don't know, but we do allow for internal 1035s as long as the contract is out of surrender, and we will fully compensate the advisor on that. So in this scenario, we didn't show an internal 1035, but ultimately, if they had bought a 5 or a 7-year product with us, John could have done an internal 1035, paid the advisor again on it. Maybe there was something better in our block of business that's available, or a block of annuities that are available at that time. So anyway, for this example, he didn't do that. John, at age 75, took no distributions. He passes away. Something else that's unique to us, I believe, is traditionally when an owner of a contract passes away and the surviving spouse is there as the full beneficiary, they could, right, have two options. Option one is they're typically allowed to continue the contract, keep all the benefits that were available to John, and just keep the thing cooking. Or option two is you can 1035 it out to a new carrier and ultimately get paid again on that piece of business, should that be the most suitable thing to do. Now we have a third option at MassMutual Ascend. We allow for the spouse to file a death claim and then ultimately do an internal 1035 to a solution that makes more sense for him or her. We fully compensate the rep on that. Now, who are likely the new beneficiaries, folks? That's rhetorical. Likely the adult kids, right? Now the adult kids are the new beneficiaries of mom, let's say mom's annuity, Jane's annuity. And now she tries to grow those assets over the course of what looks here to be 21 years. Again, remember, she could do internal 1035s along the way, get paid again as a rep. Ultimately, what happens here is, if Tim moves to the next slide, is there's a couple of options at the death of Jane. There's a $227,000 lump sum option. Ultimately, that's a nice gain, so it's probably a pretty big tax burden, right? If you remember, we put 100 grand in, so that's a pretty big tax burden. Or they can inherit the annuity to generation 2 and continue the annuity's growth and start stretching those benefits. So that would be the next slide. Yeah, you're there, Tim. So John and Jane's 48-year-old daughter, Allison, inherits the 227. She decides to stretch those assets. And I think you guys get it from there. She's stretching the benefit payments while at the same time hopefully growing those assets. And ultimately, at age 75, there's still $306,000 that she's taken in total distribution, and still 190,000 left. So just a great story. We have this as a marketing piece, by the way, kind of these last 3 or 4 slides I showed you, that is client friendly. So you have those available to you if you want to have them. We also have a nice couple of Q&A pieces, one for IRA inherited and one for non-qualified inherited, so that you understand how to do that business with MassMutual Ascend. Of course, Tim and the service team over there at IAMS, I'm sure can help you walk through it as well. So Tim, that's what I've got there. I think I'm going to move on beyond this, other than real quickly, I think bullet point 2 here speaks volumes, folks. A small percentage of heirs actually work with their parents' advisors. I don't care what you look at in the way of surveys in the marketplace, anywhere between 5 and 15% is the number when you look at these surveys in the marketplace, that the heirs actually work with their parents' advisors. I want to challenge you to do a little better job potentially at working into that beneficiary type situation. Have that beneficiary planning. But also, what if you're working with a person my age? Maybe you did some business with a 53-year-old. Folks, I mean, I now am buying fixed annuities. I could not pass up the fixed rates that were available over the course of the last year. I've bought 3 fixed annuities, 2 fixed, 1 FIA. And the reality is, I never even thought about an FIA at this point. But if you have that 50, 55-year-old client, the likelihood is they have a parent that's probably alive that's 75, 80, 85 years old. So when you're talking to that parent or to that client, you could ask, hey, are your parents, I see that your parents are still alive. Hey, do you think maybe they own some annuities? I'd love to do a review with them on the annuities they own and ultimately help you understand that when they pass away, if they do have annuities, that you don't want to just take that annuity and surrender it. There could be big tax implications there. Hey, do you think we should talk to him? I'd love to give him a ring and maybe we can have a chat, or maybe the 3 of us can go have some breakfast one day. Or ultimately, maybe it's that 75-year-old, 80-year-old client you're working with. You need to ask them, hey, I see here that the beneficiaries are a couple of your kids. They need to understand that when you and your wife get your halos and something untimely or unfortunate happens there and those assets move on to the next generation, that they don't just sell these. These are big tax burdens potentially. Hey, do you think we should have them come in? Maybe we should have a quick breakfast or a nice quick meeting. We can even do it via Zoom if you'd like, just to help understand. And what are you really trying to do, Mr. Advisor? You're really trying to uncover more assets from that next generation, or even maybe the parent. So I ultimately just wanted to share that with you. And then let's get into a little bit of product, Tim. Tim mentioned, and that's the next slide, Tim. Yeah, there you go. We have our top 2 selling solutions, and I'm going to try to close up here in 5 minutes if everybody can give me your time for 5 minutes. Our top 2 selling solutions with MassMutual Ascend are a 7-year fixed indexed annuity called American Legend 7. Unique here, we do allow for flexible premium payments. So we allow for flexible premium payments all the way through year 7. All those new premium payments get whatever the new rates are at that time. So new money rates at that time. But as you can see here, we've got a few different index strategies available to you. The one that stands out and that Tim and I think the team have really gravitated to with us is the guaranteed cap strategy. So the S&P 500 7-year cap lock strategy. Now keep in mind it's annual point to point. So you do not have to wait 7 years to understand what your return is. You're still getting annual credits, but now you're guaranteed 9.25 guaranteed cap. Hey, I get it. There's other S&P 500 caps in the marketplace that might be 75 or 100 basis points or more higher than us. But the reality is, folks, we've kind of seen an interest rate declining environment here over the course of the last 4 or 5 months. And there's pressures on insurance companies to keep rate, right? Because you don't want to bamboozle the client. You've come to them with a cap or a rate, and then ultimately the carrier, depending on what's going on in the marketplace, is going to be challenged sometimes to live up to that rate year after year after year on renewals. So why don't you take that out of the equation? I think we all understand that MIGAs have been the big seller over the course of the last year or so, just because of where interest rates have been on fixed product. So you probably have a lot of clients that are seeing or are used to really nice traditional fixed rates right now. And now you're going to try to present to them an FIA because you're starting to see a little bit of a swing or a spread now where caps and FIA rates are a little more attractive than what you could do over the same term in a fixed rate. But now you got to talk to them about 2 variables, right? The variables is what is the market going to do to help me deliver on the return, whatever that cap is? And number 2 is that cap going to remain? Is that rate that comes upon renewal, is that going to be attractive enough to deliver the return? So we can take one of those variables out of the equation for you. And now you know that, hey, I can do up to 9.25 on the S&P 500 without any risk of that cap being lower. So that's something I think that is really outstanding for us. Now, the reality is, I don't know if I've got it here. I do. Our renewal history has been phenomenal, guys. I mean, if you look at our renewal history, we've done a nice job. So if you do want to allocate some of the assets to another one of those few solutions that I showed, Tim, next slide. Um, if you see here, the renewal history has been really good. So, for example, if you look over to the middle column, the S&P 500 1-year point to point, something that initiated July 6th, 2019, as you can see, was 4.65. We renewed at 465 each and every one of the next 4 years. And if you were to look across the board, you would see that would be the case for the most part on all of the index strategies. Now, the reality is, that isn't guaranteed. I mean, we could, and we have seen, especially with our 10-year product and a couple of products prior to the Legend 7 and the Landmark 5, that it did hit a little bit on renewals. So we do a nice job with renewals, but ultimately it's still not a guaranteed number. Tim, next slide again illustrates where our renewals have been. Legend 7, again, our top seller, has done very well there. So next slide, Tim. Next two slides anyway. American Landmark 5. Here are the rates on our 5-year product. Again, we have the guaranteed cap strategy. Purchase payments of over 100,000 are 8.5. It looks like I've got that switched accidentally, but 8.5% cap on the guaranteed 5-year annual point-to-point strategy. And if you were to illustrate, I did illustrate, and I can't show it to you because I'm not driving over here on my side, but I illustrated this prior to our call today. And actually, I illustrated a 7-year product with the 9.25 cap. And over the last, over a 7-year period, we illustrated $100,000 growing to about 156 over those 7 years, which is a 6.6%, I believe 6.5 or 6.6% annualized compounded rate of return on your safe money. So it is still an outstanding idea, a solution, a guaranteed cap rate, and I think that might be it for my comments for the most part, Tim. And if you want to just swing over to the next couple of slides, you can see my cell phone number. But ultimately, I think I wanted to share with you a couple of sweet spots with us, and then a couple of, an index strategy that is garnering a lot of attention in the marketplace. We did 8.5 billion last year. And on the FIA side, the number one strategy, of course, for us was that guaranteed cap story. Another thing to note, our guaranteed minimum surrender values have bumped to 3%. So we've got 3% GMIRs and guaranteed minimum surrender values right now. Our commissions have actually bumped this year at street level by 25 basis points on our 7-year and our 5-year product. And then keep in mind, we have very good trail commission options that we might save for another day, or that Tim can show you. We have a nice commission calculator on our website. Tim, I'm going to turn it over to you. That's it for my comments for the most part, but I'd be happy to answer some questions.
Yeah, and I think you answered this, but we did get a question on the 5-year product on the cap rate, and so I'm going to swing on over there. And I think it was on this 8.25 to 8.5. So just to confirm, the 8.5 is for the over 100,000, and the 8.25 is for under 100,000. Is that correct?
Yeah, I just had those two switched. Yep.
Gotcha, and wanted to make sure that was there. Did have a couple of folks who mentioned that they'd like to get some information about our Ascend event. And then I had a couple of questions here. The one is around your gold index. Had a few agents ask me for it. I don't have it all the time, but tell me a little bit about that. I know it's got a very competitive cap, to coincide with the S&P, but not an index that you find on all FIAs out there.
Yeah, and when it's good, right? That's had some really good years but when the markets are swinging on the equity side, it tends not to do so well. It's a safe haven type play. That's why ultimately I don't know that I'd put all of the eggs in the 5-year cap strategy or 7-year cap strategy, just because it might be nice to have, a quarter or a third of the assets that you can kind of move around to different things that you think might work well depending on the environment. For example, the fixed rate on this is very attractive, but real estate, ultimately might be a great place to be. And gold, as you mentioned on the Legend 7, Tim, is a non-correlated asset class. And, isn't that what we're trying to preach to our clients, especially on the fee-based RIA advisory side? We're talking about diversification. So being able to offer a solution within the indexed annuity that's non-correlated to the equity markets might make a lot of sense. And especially if you've got concerns with what's going on in the economy, then we all know that gold is a safe haven from that perspective. So being able to have that gold position, which is truly gold bullion, right, that's actually offered through who's the BlackRock, I believe, might be where that's offered through. But at any rate, great option there. We do have a couple of par rates, as you can see. We have, we've kept it simple for the most part on the par rate strategies. We have that S&P 500 with a risk control of 10. You guys have probably seen a lot of these in the marketplace with risk controls of 5 and such. The risk control of 10 allows some of that performance or that volatility through on the S&P. And then ultimately you're getting 70% of that return. And there's some years where the S&P risk control 10 did, 20, 22%. I'm going to grab 70% of that number. So that's another option that's available as well. That's pretty attractive, Tim.
Awesome. Thank you for answering that. I did open a poll up. So do you have a client that would be a good fit for this product, right? So just to recap a couple of the highlights here, at a guaranteed minimum fixed rate of 3%, you've got guaranteed S&P rates for 5 or 7 years, and then you've got lots of other great index options, A++ rated carrier. So this is obviously a carrier that can be trusted. So do have that poll open right now. We'll give it about another 10 or 15 seconds to finish up there. And I don't think I have any other questions. So the last thing, Chadd, are we still good for the first agent to contract up with MassMutual? We'll be able to get them out a little bit of a care package, a welcome kit from MassMutual?
I don't see why we couldn't.
Awesome. Well, so there you go. If you were waiting on a reason to be the first one to contract with MassMutual, if you're not already contracted with them over here with us at IAMS, if and when you do, we'll get you a care package over there from MassMutual sent to you. So everybody, I really appreciate you working with us on those audio issues at the very beginning. Chadd, I really appreciate you hopping on here and presenting your flexibility. Awesome presentation today. Everybody have a great day. Thank you for joining. Bye now.
Thanks, Tim.
Thank you. Bye.